Hello, everybody. Welcome back to my Daily Dose with Tim. Today is season 3, episode 38, and it is also part 8 of how to execute lease options the right way. So, yesterday we actually went through a very exciting episode, and I called it Business Decisions and How They Actually Affect our numbers. So, today, as promised, and also in the next couple of episodes, I really want to show you exactly how it works. So, first thing first, I'm going to actually pull up the deal analysis spreadsheet. It's a very simple one. And that's the thing. It needs to be simple because the idea is, and I think I've mentioned this before as well, is I really enjoy one of Albert Einstein's sayings is that if you cannot explain it to a 6-year-old, you don't really understand it yourself. And the other thing that I keep on emphasizing is that it's really the thought process that really matters. So this particular spreadsheet will actually summarize everything that we've gone through, especially during the deal analysis portion of this topic as well. So I'm going to walk you through everything that we've discussed so far, just so that you can see how every single number lands on this spreadsheet. And then we're going to come back and look at some of the business decision scenarios. So I understand this is going to be more than a one episode thing. And this is why if you followed me so far, then you understand that I might actually stretch this topic out by 2 or 3 more episodes. And I already budgeted 10 episodes for this. And as you can see, the breadth and the depth and the considerations, they're so wide, and every single strategy is pretty much like this. It's very flexible, it's very fluid. And this is why I want to always emphasize the importance of having multiple strategies and understanding them to the level that you really know how the strategy works, at least on a theoretical level before you do the application. And this is why, through a lot of experiences and personal experiences included, I've structured our curriculum the way we do things. There's always a theory portion, there's always the group discussions portion and the group coaching portion, and then there is the one-on-one hand-holding. Because the part about the hand-holding is that, remember, everybody's access to resources, life experiences, life skills that they bring to the table, and more importantly, level of risk tolerance are all massively different. And so that will drive us to implementing different strategies in different markets and choosing different types of properties to either get started with or to scale up with, so that you can actually achieve your personal goal. This is not about joining on a bigger deal just so that you can feel good about doing something, because at the end of the day, remember, educated and professional investors, we do it because we really want to not only grow our financial resources and long-term wealth, we also want to protect everything that we have worked for. And I think that is the point that a lot of people are missing out on. And also, again, information is simply information. There is so much information out there that if it's not relevant, if there is no thought process built in, and you're just constantly taking the information in, it's kind of like overeating. You're going to feel full and you're not going to want to do anything, and you're not going to want to eat anything else. And you're now, in this particular instance, potentially wasting a perfectly great opportunity for you to change your life financially, especially for the better. And so I just really want to share that here, just because, this is really the first time that I'm actually going into this particular topic in this format. Because if you've actually already gone back to season 1 and season 2 and watched the lease options module, I have not gone this deep yet. And it's also because of your feedback and your questions. And as I keep mentioning, all the Daily Dose episodes, they are growing organically. They are really, the topics and what I'm covering is they're largely based on your questions and your interactions with me. So I really appreciate that. And again, my personal goal is to help you understand not just the strategies, but really see it as a financial support, as a financial way out of whatever situation that you're currently in. because I can see that at all times. There are people that are financially stressed. There are people that are financially comfortable. However, regardless of what the situation is, I learned really early on from one of my trainers, and she said, you're always going to have money problems no matter what. It's just that which side do you want to stand on? Too much or too little money? Okay, so let's come back here now. I'm going to show you how every single number that we've discussed shows up on this spreadsheet first. Okay, so I am going to, well, my screen's already sharing, so I'm hoping that you can see this right now. And so first thing first, as I mentioned, this particular example, I am leveraging my home market, which is the city that I live in right now, Edmonton, Alberta. And as a result, we're going to say the CMA, and I'm going to do it as a different word here as well, because we always say making money in the buy. Well, how do you actually determine making money in the buy? We discussed getting appraisals done. However, really the street name, or what a lot of people say, is either it's the comp or a competitive market analysis. Okay, a competitive market analysis. So again, if we have an accepted offer at 586 and there is a comp value of $590,000, by definition, there is $4,000 in the buy. Okay, there's $4,000 in the buy. So today I'm really just going to focus on this particular item, because I know I got flooded with questions because I may have gone over it a little too fast, or the fact that it was done on paper and some of you guys are not quite following it. And so I'm going to really make sure that you understand this portion, okay? Because it really builds the foundation of distressed property combining with lease options, okay? So let's move forward. We did say that during the acquisition process. So if you want to look at the initial investment, okay, the initial investment box, we said we are buying this property assuming we can qualify for 20% down. So depending on, once again, the countries that you live in, that you're watching this from, you want to make sure that you understand the minimum down payment or deposit that you got to put down when you're purchasing a secondary property or a rental property. And I understand that even in some countries, it's actually a graduated scale, a graduated scale. It has nothing to do with income credit down payment alone. It also has everything to do with the number of properties that are held under either your personal name or, as we like to do it, your corporation. And so what that means is I've seen it in countries where, let's just say that apples to apples, you're in a country where whenever you buy a rental property or a secondary home, meaning not principal residence, not the one that you're going to live in yourself, it's minimum 20% down. However, maybe after 3, you are required to do 35% down minimum, no matter what. And after property number 5, you're required to come up with 50% deposit, no matter what. I've even been in country where it doesn't matter. As long as you're buying another property outside of your principal residence, it's automatically 50% down payment. And so for my Canadian friends, I know we like to complain a little bit about how little market opportunities there seem to be. And I always say this, it doesn't really matter if the market's going up, down, or sideways, or what's happening out there with inflation and interest rate and property values. We are actually relatively blessed to be in Canada and to be educated real estate investors, because we get the opportunity to at least start with 20%. Okay, I understand some of you may have other qualification challenges at this point. Perhaps you've already got a few properties under your belt and maybe they're not all performing. And that's probably the main contributing factor of why 20% calculation does not work for you anymore. So anyways, I'm actually, that's basically a subject on its own altogether. So I want to bring it back here now just to make sure that we continue this episode the way it's intended to be. So 117,200, that's exactly what we wrote down on the flip chart. And so legal fees, 2,000. And appraisal 500, inspection scale of this property likely $650 these days. And if you notice, there are two extra lines here that we put in. The first one is miscellaneous. So that could be where you would put in land transfer tax. So as I mentioned, in Alberta, we don't have land transfer tax, or again, in the UK, you call it stamp duty, meaning when you are purchasing properties, you actually have to pay this additional tax. And we don't have that, so I'm gonna leave it at 0. I also wrote down a word that says bonus. So for example, a lot of you, very much like how we run business, when our tenant buyers first move into a property, we'll likely give them a little welcome home gift basket or give them a gift card of sorts just to celebrate, their first milestone on their journey into home ownership. And so what that means is, technically this is cash out right off the bat when you are closing the deal initially, okay? Not closing as in they bought you out, however, closing as you purchased the property that the tenant buyers are going to move into and to execute their programs with. And so if you want to do that, this is probably where you will budget that in as well. And then placement and wholesale fee. Right now, we're strictly discussing the fact that we have the qualification, meaning the down payment and the mortgage ability, okay, to take on this deal. So that's why those two lines as of now are 0, and also just to stay consistent with what we've covered so far. And then, as discussed, the tenant buyer's initial option consideration comes in at $32,500. So the initial investment is $87,850. So everything else is as we've gone through so far, okay? So I'm gonna keep going, and we always look at cash flow first. And so let's take a look at the cash flow portion, okay? We say, hang on, I'm gonna show a little bit of here first. So the cash flow portion is right here. I know some of my students, when they get this spreadsheet, they actually change the process just so that it matches the acquisition, cash flow, and exit, okay, structure. So completely up to you when you've taken lease options and you get access to this, and you can do whatever you like. I am a self-professed tech challenged person. So this is the sheet that I got trained with. And so this is the sheet that I'm going to continue to use. I only made some very, very simple formula changes because that's all I know how to do it. And so fair market rent, we said 3,300. And if you look at this line here, the monthly option consideration as we calculated is $903. So as a result, on a monthly basis, their payments are $4,203. And based on the calculations from the Canadian mortgage app, we learned that the mortgage in this case is 2672.32. And as discussed, we are rounding all our expenses up as much as we possibly can based on your own level of risk tolerance. So in this particular case, just because I want to make sure this is more of a demonstration of concept, so I only round it up to the nearest $5. Typically speaking, I probably round it up to the nearest $10 mark or $100 mark even, okay? So 2675, and we say property tax on this property or on a property like this in my hometown right now or home city is about $6,000 a year. That works out to be $500 a month. And then insurance, about $1,800 a year, works out to be about $150 a month. And the other thing is, even if those numbers are not there right now, meaning they might be lower than $500 a month for property tax and lower than $150 a month for insurance, these are the two numbers, as mentioned, are pretty much guaranteed to go up. And I don't like to use the G word as an investor, okay? There are no really guarantees of anything when you know the game of investing, when you understand how some of the deals work and the variables that are included. However, here's the thing. Remember, there's a saying there, it might seem a little doom and gloom. The two things that are for sure in life, that are guaranteed in life, some people even say it, are taxes and death. And so in this particular case, like I said, even if it's not there right now, I can pretty much guarantee you that year after year after year, it's going to go up, okay? And so as a result, this is the happy number that we are looking for, that we already found, which is a monthly cash flow of $878. So for many, many people, you can even see that, okay? You can even see that, 878. Nobody was expecting any sort of cash flow, from single family homes at this caliber. However, with this particular strategy, a worry-free rental program, and you get to help somebody get into home ownership, we are able to achieve that. So over time, over 3 years time, we're able to have a total profit from cash flow of $31,608. So these are all the same numbers that we've already done on the flip chart. However, I'm just wanting you to get a little familiarized with the spreadsheet first before we go any further, okay? And so at this point, option consideration for 36 months, let's go back up to the sale price, which is their option to purchase price. And we set it at 650,000, okay? And then the mortgage balance is 449, and legal cost at closing is 2,000. And then we give them their initial investment back, and then initial option consideration. Actually, I need to change this. If you remember, this formula needs to actually be updated now. Okay, it's actually 87,858, I believe. Okay, let me just do this one more time. We say $903 on a monthly basis. I'm using my calculator, times 36 months plus the 32,500 that they came up with. So it's actually 65008. Okay, whoops, that's not the right number. I should be changing that here. So it's calculated, sorry, my bad. It's calculated for you now, so I didn't have to change anything. So in this case, remember, total profit from transfer is 46,142. And let's go all the way back up now. As we've calculated, total profit from the deal, a 3-year rent to own or lease option deal, is 77,750. That works out to be a return on investment of 29.5%. And they have a total option consideration that they have accumulated that will turn into their final down payment when they're qualified and choose to exercise their option to purchase. And so on that note, this is the overall spreadsheet. So I'm going to go into now some of the scenarios that we discussed. We're going to go into one of the scenarios that we discussed yesterday. So let's come back to, what if the accepted offer is actually 580,000? So I'm going to say 580,000 is the decision-making process. Remember, I mentioned why that is. So at 580, as you can see now, the 80% loan to value automatically changed, and the 20% down payment automatically changed. So let's go down this list now, okay? I'm gonna enlarge it a little bit, just hopefully you can see it even better. And let's say everything else held constant, okay? Legal fees, appraisal, inspection, and they are still giving you and contributing $32,500 upfront. And so as a result, total initial investment is $86,650. And we're going to say we still fix it at 650,000, okay? We still fix it at 650,000. So right now, basically, we're going to go all the way down first. Remember, cash flow. So what number would that affect if, okay, the purchase price changes? As we mentioned, it's going to change the down payment amount, the loan value, and as a result, again, if the rates all are held constant, what that also means is our loan amount goes down. Theoretically speaking, our mortgage payment on a monthly basis during the lease option program should also go down. And so when we punch it back in to the Canadian mortgage app here, I get a new number. It says 2638. 2638.12. So I'm going to actually do 2640. Okay, I'm going to change that number to 2640. I'm rounding it up by about $1.88. Okay, and nothing else changes here. Nothing else. We fixed property tax the same. We fixed insurance the same. So as a result, the cash flow on a monthly basis, instead of $878 a month, $878 a month, it went up to about $913 on a monthly basis. Okay. And then let's go all the way back up now, because at this point, nothing else needs to be adjusted. Earlier, we said the total profit was $77,500. It went up as a result. The return on investment, instead of 29.5%, it went up to 30.86% based on how the numbers changed. Okay, that's all just numbers. So let the numbers do the talking, and they are still contributing just about 10% in total option consideration towards their final down payment. And so here you can see profit went up, ROI went up as well. So that's about a 1.36% increase in your annual cash on cash or annual return on investment. Okay, if you've been watching the other episodes as well, you can actually see why in this particular case I actually interchange cash on cash and return on investment. However, when it comes to leased options, a lot of the times, or most of the times, we really just use return on investment because there is a clear start and end date of every single deal. So on that note, this is why it is so amazing with the strategy as an investor too, is the fact that there are so many different ways that you can actually change and improve the performance of your own deal, as long as it makes sense and it still creates the win-win situation that we are all here to do. So this is how I wanted to get started on walking you through some of the thought process, business decisions, and how they show up on the spreadsheet. So this portion is probably going to carry on for a couple more episodes, and I'm going to go into doing a live deal analysis because, as I mentioned in the previous episodes, some of you have already sent me, hey, you know what? I got this email. I don't think I'm ready to do this yet. However, I would be curious to see what you think, how you analyze the deal, or even what kind of questions or due diligence should I be doing. And so I'll definitely be doing that with everybody before we conclude this topic. So on that note, I'm super, super happy that you've come this far with my Daily Dose with Tim. This season really is, at this point, even I can say massively different from season 1 and season 2, simply because of the fact that you're really in the driver's seat. Because season 1 and season 2, I had a bit more of a plan, even though it was also just general framework. However, the interactions that I've been getting with you and from you, I really appreciate that, because some days it really feels like I'm really just talking to the cameras. However, your messages afterwards, because not every single one of you can actually be watching this live, because I am coming to you live during the weekdays, every single day, Monday to Friday at noon Eastern Standard Time and 10 a.m. Mountain Time and 9 a.m. Pacific Time. So I know some of you still hold down your JOBs. So that's totally fine. And I'm really enjoying the interactions one way or another. And thanks for making me feel like you're here with me and that you're learning. And some of you have even said that I'm already making a difference in your mindset shift about money, about financial education, about real estate investing, and more importantly, about how to leverage real estate as an effective asset class for you. And so this is not about a weekend conference. This is not about a weeknight seminar. This is so much more than that. Even though I also put out weeknight seminars, I want you to understand that this is how you should be approaching this, is that this is a full immersion concept through and through. Okay, so on that note, enjoy the rest of your day. If you are lucky like me, we got 29 degrees Celsius today, bright, sunny skies again, right here in Edmonton, Alberta. So enjoy the rest of your day, and I will see you back here at the next episode. Live well, everybody.